Well, hello there and good morning or good afternoon, depending on what part of the country you are calling in from. My name is Ginger Bell, and I'd like to welcome you to the Finance of America Mortgage TPO 2X Flex Suite webinar. And today we're going to be sharing information about this exciting new program. So as you're getting logged in today, I will be sharing the slides with you. You should be able to see my screen, and I have a copy of the handout that is going into the chat box. If you want to click on that link, you can download it there. I also am recording this session and will send out a copy of the recording to everyone tomorrow, along with the slide deck. So 2 different ways you can listen to the webinar today. You can dial in and listen on your phone, or you can listen on your computer. If you do have questions as we go through the information today, you can type them in either the chat box or the Q&A box. I will be monitoring those 2 areas. And so if you have questions as we go along, feel free to type those in there. And I may take a break and ask the question, answer the question during a session that it comes up in, if there's some clarity that's needed. Otherwise, we have a Q&A section that is at the end. And again, if you'd like to get a copy of the handout, I am posting that in the chat box right now. And let's go ahead and make sure that you all can hear me and you know how to ask questions. And if you can type in the chat box or in the Q&A box, let me know how you're doing today on this Thursday roller coaster ride we're having. Shortage of gas, rates going all over the place, crazy time. But hey, we're used to that in the mortgage industry, right? And here we are in spring. Today I'm in Portland, Oregon. Beautiful sunshine weather we have here. I hope you have good weather where you're at as well. So I see several of you typing in there. Thank you so much for that. That way I know I'm not having a conversation with just myself. So we have another webinar coming up in May that I want you to be aware of, and that is next Thursday, so a week from today. Same bat time, same bat channel, but you can register at FAM TPO. And this is a really exciting webinar. I'm very excited to be able to share this information, and the webinar is called Leverage Your Expertise, How to Market to Real Estate Agents. And so I'm going to be going through scripts, ideas as far as making those wonderful cold calls, which we all love, but really ways to be able to leverage and build your business. So with that, let me introduce our host today, myself, Ginger Bell. I'm the CEO of Edu Marketing and am blessed to have Finance of America Mortgage as a client to help them facilitate their training that they do for all of you, our important customers. Nectar Collegian is going to be in the background today. I know she's working on some other things. Mindy, I saw hop on the call, so I know you're there. Mindy Perlmutter, who is the AVP Credit Policy Product Development Manager. So Mindy, thanks so much for hopping on the call.
Hi, Ginger. I always love doing trainings with you.
Well, we make it fun, right?
We do.
I love it. So, a great program. We've been doing webinars on the 2X Flex for a few months now. So it's really an exciting program. I know you have some scenarios that we've gone through with it, but let's go ahead and hop in and just talk about really what is 2X Flex. And I know really the terminology flex equals non-QM, but we don't call it the flex non-QM. So what is 2X Flex? It's a suite of products for borrowers who don't meet the traditional agency or jumbo traditional guidelines for income and credit. Mindy, we did a webinar earlier this week on the Easy Jumbo. So this is another alternative to jumbo. And so we're going to cover really 4 different things today. The 2X Flex, which has the 1 year, and the 2X Flex Bank, which is offered for 12 and 24 months bank statements. And then the 2X Flex Asset, which is our standalone and asset qualifier, and then the new Flex with Assets, which you can actually combine with the full doc. So we're going to get into that. If you have worked on any of the 2X programs, you know how great they are, and there's some incredible enhancements. That's what we're going to talk about. So it's new and better than ever. And then we're going to finish up the presentation today. We're going to talk about the 2X Flex PreCheck, which is awesome because it really allows you to work with those self-employed borrowers and get an idea on, number one, if they qualify, which is the best program for them. and then a technology LendScore, which allows you to run the program. So with that, let's go ahead and take a look at an overview as far as 2X Flex. And so Minty, I'll let you go ahead and take it away from here.
Thanks. So Flex is available in a variety of fully amortizing terms of fixed and ARMs. And interest only, we've expanded our options to allow a 40-year IO in addition to the 30-year fixed and ARMs that we've offered in the past. Loan amounts include conforming and jumbo limits with a minimum of $100,000, and loan amounts go up to $2.5 million. 1 to 4 units are eligible, and Flex is available for all occupancy types. So Flex allows for many different borrowers. What I want to call out to you today is first-time homebuyers. One of the important guidelines and requirements for first-time homebuyers is they must have had a prior rental in the past 12 months. Another thing is we do look at payment shock. Now, this is the only area of the guidelines that we do look at payment shock, and payment shock should not exceed 300% for first-time homebuyers. Non-occupant co-borrowers, blended ratios are acceptable. Just keep in mind we have some other restrictions on non-occupant co-borrowers, such as a max LTV of 80%.
Okay, good. And so talking about those transaction types, purchase, rate and term, cash out, all eligible, right?
Yes. So all transactions are permitted. If there's subordinate liens, this always comes up as a question. Do I consider it as a rate and term or a cash out? So to be considered as a rate and term, if the junior lien was used to acquire the property or seasoned for 12 months, we will consider that a rate and term. Cash out transactions do require the 6-month seasoning. And then you have determining the LTV on a refinance. So borrowers looking to do a refinance and purchase the property at least 12 months ago will be able to use that appraised value to determine their LTV CLTV. But if they recently purchased their property within the last 12 months, we're going to use the lesser of the purchase price plus documented improvements or appraised value. And we always use for seasoning note date to note date, and continuity of obligation is always required. Okay, so we said cash out transactions are permitted. The maximum cash out allowed is $500,000.
Then cash out is not permitted on the 2X asset or the 2X Flex with asset, right?
Correct.
Okay, good. So let's talk about credit.
Good. So 2X Flex, we have in the past, when we launched this pre-COVID, we had 3 credit classes. With the relaunch, we have just one set of guidelines. So a 24-month housing history is required, 0 times 30 in the most recent 12 months. If there are any late after 12 months, between 13 and 24, we will require a letter of explanation. Trade lines, we look at 3 trade lines. We want 1 reported for 24 months, all active in the most recent 12 months, and 1 with a minimum of 2,500 high credit balance.
Very good. So derogatory credit is also something very important. So let's look at that.
So this was expanded since we don't have the 3 credit classes, and we allow 4 years seasoning on derogatory credit. So that's your bankruptcy, foreclosure, short sale. That's all 4 years. So a lot of other jumbo products have a 7-year seasoning requirement. So if your borrower has less than 7 years seasoning, they can look at Flex because it's a 4-year seasoning requirement. And we always require reestablished credit. One thing to note is LendScore, which we're going to get into in a little bit. You might have already taken that training and used it for our other jumbo products. It's hard to read the credit report with LendScore regarding to identify upfront the borrower, the trade line requirements. So LendScore will review and condition accordingly. Sometimes you might have a hard time reading the credit report.
Yep, very good. Okay, so residual income is always important, and especially when we're getting into jumbos. So, and I'm going to check your sound here because we're saying, I think we're getting
Yeah,
a little bit of an echo.
I hear the echo too. So I just saw the comments as well. You want me to call back in?
No, I tell you what, you keep talking and I'll work on my end.
Okay, sounds good. So residual income is required on all loans, but it's a very simple calculation. So it doesn't look at how many people are in your household. All it is your total income minus your total debt. So total debts, we're talking about subject, PITIAA, and all other debts. Very simple. The residual income worksheet will be completed by your underwriter.
Okay, very good. So let me know if the echo has gone away at all. I'm working on some of the things. Zoom sometimes have some of those things, but let's talk about maximum financed properties.
Okay. So with Flex, we have an unlimited number of financed properties when the subject is a primary. When it's a second home or investment, we go up to 15. There's always 2 months reserves required for each financed property.
Okay, very good. And income options.
So we're going to be getting into these income options. Like we said, by the product name basically tells the type of income option that it is. A full doc 2-year, 1 year, 12 or 24 month bank statements, and our asset qualifier that's either standalone or full doc.
Very good. And 2 years landlord history is required when using the rental income, right?
Yes, 2 years landlord history is required, and rental income is permitted with the Flex, the one doc, and bank.
Oh, very good. Okay. And so let's talk about tax transcripts.
So transcripts are permitted, and it will depend on the type of product. So of course, when you're doing an asset product, you're not going to require any transcripts because we're documenting their income based on their assets.
Okay.
Okay, so wanted to, before we get into assets, wanted to tell you about an exciting expansion since we launched our product was regarding liquidity analysis. So with K1s, because I know this is always a big thing about requiring the liquidity analysis. So we did update our guidelines. So if cash distributions are less than or equal to 20% of ordinary income, a liquidity analysis is not required. So that was a big expansion. We've made many brokers and salespeople happy about that. So keep that in mind when you're looking at your loans.
Okay, and how about appraisals?
So appraisals, our threshold to determine if you need 1 or 2 appraisals is 1.5 million. So if it's 1.5 million or greater, then you will require 2 appraisals. FAM will run a CDA on all loans. And if the market changes, we're not in that market right now, but if properties are located in a declining market, they are not permitted.
Okay, very good. And then I'm going to let you go through the full documentation. And then Mindy, it looks like I have a different slide deck I'm going to push in here in just a minute for you because I know we have some scenarios we want to go through.
Great, thanks. Okay, so full doc. So you have your 2 years of income documentation. It does allow borrowers to go up to a 50% DTI. And one of the other benefits that we spoke about earlier is borrowers with derogatory credit. You have a jumbo loan, 7 years is most other products. This will allow for less seasoning for that derogatory credit. Full doc will go up to a LTV up to 90%. We do allow FICOs down to 660, and our DTI for the full doc as well as all of the Flex Suite is a 50%. Okay. And while Ginger's changing everything, I'll continue on to go into more detail on our 1 year. So our 1 year is basically what the name says. It's 1 year of income documentation. So this could be for self-employed or for wage earners. If you're self-employed, you still must be self-employed for 2 years. And it allows up
I'm
to
going to
the
get it open in
50%.
just a second here.
No problem. So the 1 year, go up to 90 LTV. However, it has a little bit higher minimum credit score of a 680, and we still have that 50%. So there are some income types that are ineligible for 1 year, but are eligible for the full doc for the 2 years. So some of these are like capital gains, dividend and interest, short-term rental income, future income, foster care, ADUs. These are ineligible for the 1 year, but we can use them for 2-year full doc income documentation. So wanted to just go over some scenarios with you as when maybe you would use a 1 year. So Mike owns a pizza and sandwich shop that does takeout. He already filed his 2020 tax returns. Since he saw increased sales with all the deliveries during COVID, his 2020 earnings were higher than 2019. 2X Flex 1 year was the perfect product for him to qualify using only his 2020 earnings. So that was an example for a self-employed borrower. Another scenario for a wage earner is Michelle's a wage earner that decided to change jobs but stay in the same line of work. Her new job was a larger salary increase. So 2X Flex 1 year allowed Michelle to use her most recent year's wages to qualify for the bigger home instead of averaging both years. So that just gave you some scenarios. So you might have some loans sitting on your desk with one of these. If you do, reach out to your AE, send it in to FAM.
Okay, so
our
that was
next
the bank
product
statement, right? So now we're going to go into the 12 and 24 months.
Yes, for bank statements. So basically our 12-month and 24-month bank statement is you're qualifying the borrower using their deposits from either business or personal bank statements. At least one borrower must be self-employed or a 1099 employee. And we do allow multiple businesses. So a borrower can have up to 3 businesses to be used to calculate their income. We'll go up to a 90 LTV on bank statements with FICOs as low as 680. And of course, since it's flex, it's always a 50 DTI. So what else besides bank statements? We know we need that 12 or 24 months. We need a CPA letter, an operating statement, or something equivalent that's going to document the ownership percentage, because that's going to be needed for the income calculation. We are also going to require the 2X Flex Bank Business Questionnaire. And that's going to give us a little bit more information about the business so we can understand it for when we're calculating income and reviewing all of the deposits. So when we look at the bank statements, we sometimes see NSFs. So FAM handles NSFs a little bit different. And we don't look at them as individual occurrences, but rather as events. So we consider an event to be one or more transactions occurring within 3 business days, and no more than 3 NSFs in the most recent 12 months. So if a borrower had, say, 5 NSFs in 2 days, for FAM, that would be considered one event, and that's acceptable. Just note that LendScore will not pick this up as they don't review the bank statements. So this is something that you can submit for the PreCheck, and the Flex Desk will review. We'll get into PreCheck in a little bit. And if the borrowers are providing 24 months bank statements, the activity from months 13 to 24 must be reviewed. Just take note, this is the one positive with NSF, is that if overdraft protection is tied to the secondary account, transactions are permitted and not included in the NSF count. So that's something positive to note with overdraft protection. Okay, so how are we determining income on a bank statement product? So someone is providing you, says, I have personal bank statements. So if a borrower has personal bank statements, we want to see if the deposits that they're using in that account are all wages from their business that they're paying themselves, or if it's a commingled account and they use that bank statement to receive all the income from the business, but also pay their expenses. So if you have a personal bank statement, we're going to ask if the borrower has 3 months of business bank statements. So if borrower has 3 months business bank statements, we are assuming that their personal account is for personal. They're transferring the wages over. Their business account, they go and they pay all their expenses. And if that's the case, we can use 100% of the eligible deposit. If the borrower does not have business bank statements, we're assuming it's a commingled account. And with that, we have to determine what the expense ratio is because we know not all the deposits are income. So we're going to take that personal bank statement and we're going to use our income, our business income calculation method.
And we're going to get into those in just a few minutes. So are you ready to move on to the business bank statement?
Yeah.
Okay, let's
go. So if it's a business bank statement, we have 3 options to determine the expense ratio. You're going to have a fixed expense ratio. You can use an expense summary or a third-party P&L. So for the fixed expense ratio, this option is going to be the least amount of documentation for your borrower. It will look at the borrower's response on the business questionnaire to determine if it's the service or the product business and the number of full-time employees. This will determine that expense ratio. You can see that there's a chart, and based on the type of business and full-time employees, it's going to give you an expense ratio anywhere from 15% to 80%. So it might look a little confusing that there's a little bit more that you have to put into play, but a lot of times companies that have one expense ratio will have like a 50% expense ratio. If your borrower has a service business and it's them by themselves, or they have 1 to 5 employees, their expense ratio is going to be a lot lower at FAM. So take into account the type of business they are and the number of employees, and it will be a lot less documentation for the borrower. Just note that full-time employees, we consider part-time 0.5, and contractors are included as a full-time employee. Another option is our P&L. So we want P&L covering the most recent 12-month bank statements. So if your most recent 12 months, say, starts at March, then we're going to have a 12-month P&L starting at March. And the last option is an expense summary, which is just a letter on the accountant's letterhead with the name of the business, the owners, how long they've been in business for, the percentage of ownership, and what their actual expense ratio is. Right? So a CPA letter is required for the bank statement programs, but it's only there to document the percentage of ownership unless you're doing the expense summary. So if you're doing a fixed expense, you just need a CPA letter to document the ownership. They don't have to document anything regarding the expense ratio.
That's awesome. And I know we have an example here. So just kind of looking at what that income calculation can look like.
Right. So the Flex Bank calculator is awesome now. It calculates everything. It puts everything in the right order. And then at the bottom, it's going to figure out your total monthly income. So it's going to take your total deposits minus that expense ratio. So when you submit your loans to PreCheck, they're always going to look at the fixed expense ratio because that's the least amount of documentation for your borrower. If for some reason your borrower says, you know what, you're telling me that I have a 35% expense ratio and my expense ratio is only 25% and I needed that little bit to qualify, feel free to use one of the other 2 options, the expense summary or the P&L, if that's going to give you a better expense ratio than you need. But we're going to always start off with our fixed expense because we all like less documentation. Once we get our net income, we are going to take that by the ownership percentage. That's what we documented by the CPA. And it'll give us our net income owned and divided by either the 12 or the 24 months of bank statements that we received.
Perfect. So before we move on, we have a couple of questions that are relating to this information. And the first one is from Michelle. And Michelle is asking, if they do not have a CPA, how will we document ownership?
So when we're looking at the guidelines for Flex, I believe they can use, let me pull it up and I'll get right back to you.
Okay.
Can I add that? I'm here. I can step in and answer.
Oh, hey, Nectar.
Hey, hi, everyone.
Hi, Nectar.
I've been listening. Great job, Mindy, as always, always, always. So You do have some that don't have CPAs, but do have bookkeepers, right? It does not have to be from a CPA, but it has to be someone who actually could claim and they're doing as their bookkeeper, they could complete it. Now, if you have someone that's doing it manually, meaning they're filing their own tax returns, that's another problem. But if you have a bookkeeper, but bookkeeper actually can write that letter also, and we need to validate that the bookkeeper is in the business, whether they have a website, whether they have a letterhead, they have, documentation to prove that that's what they're doing.
So they're
And
asking
we could also
Nectar.
use an operating.
Okay, that's the next question. How about an operations manager?
Well, we can use an operating statement as well.
Okay.
Statement, but not manager, Michelle.
Okay, very good. And just for clarity, Catherine's asking, so does a wage earner always need to be averaged, even though the new income is salary and much higher than past earnings? And I'm not sure what that question relates to, Catherine. So I think we might need a little bit more clarity on that, unless you may understand that.
I do, so I could follow that. I think
Perfect.
what Catherine is asking, if I have a wage earner, and let's say 2 months ago, they were making $10,000 a month, and then they got a raise, and today they're making $12,000 a month. Do I need to average the income? I do not average the base, Catherine. I'll just use what the current salary is. However, if I have OT, and if I have bonus or any other income as part of my wage earner contract, then I have to average the OT and the bonus. But their base will be the base as of today, as long as I have a pay stub to show that that's what their earning is. Is that what the question was, Catherine?
Yeah, and Catherine, let us know on there if you can just type in if Nectar answered that. And I'm going to do one more question, and then I think we're going to. So Catherine says yes, Nectar, that was it.
Awesome.
And this relates to documenting the number of employees. How do you document that?
So that's documented on the business bank questionnaire that's required for all flex loan bank loans.
Okay.
The borrower would have to indicate.
Okay, very good. And we're back to the CPA letter or the bookkeeper, and just to kind of make sure that this is answered completely. What about self-employed that use QuickBooks or TurboTax?
And again, what we're validating here that they've been self-employed, right? So if they're a corporation, we can always use the Secretary of State documentation as self-employment to show what it is. But if it is QuickBooks or TurboTax, it's going to be, or QuickBooks, they're going to have to find somebody like a bookkeeper, right, to be able to give them that information. We need a third-party source to validate their ownership, right? Because QuickBooks is, unless you give me your tax returns or your 1120s or documentation to show your 100%, which we don't want to see on a bank statement, right? You need to give me something from a third party that validates that information, whether it is maybe their operating statement that shows, their 100%, whether it is a bookkeeper that's doing their work. We got to have some documentation. We can't basically just ignore if they're using QuickBooks or TurboTax.
Okay. So I'm going to move on. Do you want to answer that?
I don't know if I want any K1s. I do not want to see any bank statements or any, I do not want to see any tax returns. The K1, it depends. It depends whether the K1 is going to show negative. I prefer not to see the K1. I know the K1 is going to show the ownership, but I got to look at it. I mean, it could be something we can look into, but it could also backfire also, depending as what documentation you show me.
Yeah. And, hopefully, Nectar, it's a small percentage that don't have access to a bookkeeper or a CPA. But if they do, then definitely reach out to your FAM account executive and they can walk you through that. So I want to keep moving on and talk about some expansions and talking about business funds. So Mindy, you want to do that?
Yep. So we always like talking about expansions. So we have expanded the business funds. The main thing is that they no longer need to be transferred to a personal account. So before you had to transfer funds to the personal account, have it seasoned for 60 days, that is no longer. So we will allow 50%, up to 50% of the account balance, and then based on ownership, and it can stay in that business account and just be withdrawn for closing. So no more transfer. The second thing is large deposits. So we used to base our large deposits off of any deposit that is greater than 50% of the monthly qualifying income. And we expanded that to go by the average monthly deposit. So we didn't want to penalize the borrower for looking at a lower figure because we take into account your ownership and your expense ratio into your qualifying income. So we wanted to make that a little bit more open. So we are going by the average monthly deposit. So they were just two expansions that we're very excited about to be able to help you.
And again, we have a couple scenarios here just to kind of give you an idea as far as a reference point of who might be good for this particular product.
Okay, so Dorothy, self-employed psychiatrist, looking to use bank statement deposits to qualify for her new home. Her bank statements are listed as a DBA, so she completes the business bank questionnaire. Since Dorothy doesn't have anyone else working for her, and she's a service business, she has a 15% expense ratio using the fixed expense method. The only other documentation she needs besides her bank statements is that CPA letter validating that percentage of ownership. So very little documentation after she provides that bank statement and the questionnaire.
Very good. And again, a service business. So that percentage is really critical. And we have a couple more scenarios.
Okay. So scenario 2, Elizabeth owns a pet sitting business. She's able to verify that she has a business account, but pays herself every month to her personal account. Since she has two separate accounts, we can use 100% of the eligible deposits from her personal account. A business questionnaire is required to inform the underwriter more about the business, and the CPA letter verifying the percentage of ownership. So we can use 100% of the eligible deposits because she can show us that she has a separate business account. Okay, Jack is self-employed, but 1 month had 8 NSF transactions within 2 days. Since FAM looks at NSF as events, which consists of 1 or more NSF occurring within 3 business days, Jack only had 1 event and was able to close his loan with FAM. So that NSF is really, huge how FAM looks at them.
Absolutely. And then our final scenario on this.
So Bill is a partial owner. He has at least 25% ownership in 4 businesses. So he was able to qualify using 2. He provided the business questionnaire for both businesses and determined that the fixed expense ratio will work for both. Since FAM allows up to 3 businesses, they all need to use the same expense ratio. Bill was able to get his loan at FAM using 2 businesses to qualify for income.
Right. So 2 businesses using the same type of qualification method. So you can't use one for one business and one for another.
Right.
Okay. So, and keep typing your questions in. We will have a Q&A session at the end, but I do want to keep moving on and talk about the 2X Flex asset. And Mindy, I'll let you kind of go through some of the highlights.
Yep. So our asset products, basically we're using assets and we're turning it into income to calculate your DTI. So the borrower does not have to be of retirement age. For the standalone asset product, the borrower does not need any employment. And we have the 2 options, your standalone assets or in combination with the full doc. So either the standalone or the combination of full doc, you can go up to 80% LTV with a minimum credit score of 700. And again, it's in the Flex Suite, so your DTI is 50%. And cash out transactions are not permitted. So we do have a minimum required assets, and this will be determined based if you have a standalone product or your full doc product. So we always require 6 months of personal bank statements. For a standalone, the borrower must have at least $450,000 in qualifying assets, or 1.5 times the loan amount, and it's the greater of the 2. And then you ask, what's qualifying assets? Like, what do we consider that? Qualifying assets is your eligible assets minus your funds for closing, minus your down payment, your closing costs, your prepaid and reserves. If you're doing a full doc with asset qualifier, then we require a smaller amount, and we require $250,000 in qualifying assets. So eligible assets will fall into 3 categories, and that will determine what percentage is permitted to be used as income. So if it's a checking, savings, money market, you can use 100%, down to retirement assets that are eligible for 70%.
Very good. And then the income qualification calculation is this.
Right. So we said that the borrower's assets are converted to a monthly income because we still need to get a DTI on the loan. So you're going to take the qualifying assets, you're going to divide them by 84 months, and that's going to give you that monthly income that you're using in the DTI.
Very good. Okay, let's go through a couple scenarios.
Yep. So Jack and Jill are retired and have no employment, only have retirement assets. 2X Flex Asset Program was able to convert 1.8 million of retirement assets to income, which allows them to qualify for their new home. And always note, we have this pre-checked option we're going to get into very quickly, but always do a pre-check, even if it's the asset program, as the broker may, on this scenario, the broker didn't take into account that the haircut of the assets at 30% difference. So this way, when they submitted it, they thought that they had more eligible assets than they did. And the borrower wasn't able to buy as large of a home as they wanted. They were still able to get one of the homes that they wanted, but always do a pre-check to make sure that you have the right calculations and, you know, you're talking to your borrower and getting them with the right information.
Right. And then we've got another scenario before we move on to our pre-check.
Right. So our last flex scenario, this is flex with asset. It's Eric and Ariel were purchasing a new home. Eric is the sole supporter of the family. When the underwriter was calculating his income, their DTI was a little over 43. Normally, the borrowers wouldn't be able to get a jumbo loan, but Ariel had some assets. So we took her assets, converted them to income, and was able to get their DTI under 50% and eligible under the Flex with Asset program.
Very good. So before we leave assets, we have a question, Mindy. Catherine's asking, do you use 100% of assets regardless of the type of asset?
No. So if you want to go back to slide 43, there you go. Okay, so depending on what the eligible asset is will depend on the percentage that can be used as income. So if you have stocks, bonds, or mutual funds, we're only going to use 75% of that balance as income.
Okay, cool. And, oh, she says.
Okay, so there is a minimum amount of assets. So when you're using a full doc with assets, the borrower must have 250,000 qualifying assets to be eligible to slide right before. There you go.
Yep. Yeah. And there's a lot of information we're covering here. So if you're asking questions, we're happy to go back over it again, and we'll make sure and stay on and answer any questions you have. And of course, your FAM account executive is always available too. So getting all this information together, one of the greatest things about this program, Mindy, is the pre-check. So the pre-check happens really before you take the application, right?
Yes. So we want to make sure that how you're calculating income is how we're calculating income, because really we have the deciding say in that if the borrower qualifies or not. So we put together a team at FAM for the Flex loans, and they handle all these pre-checks. So it's super easy. You all can get into the FAM portal, go into the portal, select that 2X Flex pre-check, go to a pending request, fill out this form, which has a lot of information that's similar to the business questionnaire. So it's going to give that Flex Desk information about the business. Upload your bank statements, and they're going to be able to tell you what income they're calculating, what the expense ratio is, and you'll know prior to your application what income you can use to qualify. So there's plenty of advantages to this. You know, they're going to calculate all types of flex income, just not bank statements, just not assets. Even if you have questions on a full doc, send it over. Know your income up front. They can review any of the complex income scenarios with you. You can know up front if your borrower's income supports their liabilities. Determine if the borrower meets the fixed expense ratio or if they have to get additional documentation. You can work on that documentation before you submit the loan to underwriting to get a faster process. And really, in this purchase market, know how much of a house the borrower can afford up front.
Absolutely. So when you get a scenario in, gather the documentation and then go and do the pre-check and begin with that. And that way you're going to have a very solid idea about what's going to be the best for them for qualifying. Then once you do that, then you can take the application, run it through LendScore, and then get into submission. And we have a couple things on submission that we want to cover. And we've created a submission checklist for the 2X Flex.
Yeah. So, right. So Flex has its own submission checklist. We added some helpful hints on here. We give you a link to the guidelines, how to run LendScore, as LendScore is required on all Flex loans. And it's the checklist, all you have to do is click on the product that you're submitting for, and it will take you right down to the section of the checklist. And then always at the end, we have important information. The FAM must issue the LEs for all Flex loans. So make sure you note that. That's at the bottom of the submission resources. And the underwriting fee for all states is $12.95 for Flex.
Yeah, so important to remember, because I know for some of you, you do give that initial LE. And so with the Flex, you are not going to have the option to provide that initial LE. FAM's going to do that. And so you will, first of all, be aware of it. And what you'll get is an LE request. And so that's what you'll fill out. So different submission checklist. Do not do the LE. So you're going to begin with the pre-check, then do the LendScore, then do the submission. Make sure you're not giving the LE. And if you haven't been through LendScore, we'll just kind of do a highlight as far as what that is. And Mindy, I'll let you cover that.
Okay. So it's a point of sale eligibility tool. It's something that you're going to run upfront prior to submission. So it's available for the entire Flex suite, our J-Class J and our J-Class R products. So it quickly checks the following parameters. So it's going to look at your product matrix. So it's going to review your LTV, your loan amount, occupancy, and property type. When it looks at the credit, it's going to review the FICO and the trade lines along with derogatory credit. For income, it's going to look at the income type as well as your DTI. And then assets, it'll look at your reserves as well as your funds to close. So LendScore will provide one of three results. In this case, in the upper right-hand corner, you're going to see that it's a pass. So the specific test will indicate if the loan met the individual requirements. So pass, everything met. Refer means that the findings are not conclusive and require a manual review to determine if the loan meets program guidelines. So if you get a refer, please still submit it. Let someone at FAM look at it and say, you know what, this meets, we're good to go. And a fail means that, you know, one of the tests did fail and the loan is not eligible.
Okay. And then we also have resources as far as program guidelines versus the actual loan data. And then that pulls everything in to give you the pass. So really, it's just like what you run with D or LP, but it's an automated operating system that applies to the 2X Flex. So
yeah, this is your second page of your LendScore, and it lets you know what the actual guideline is and what your guideline is on your loan. And just remember, LendScore, it's meant to be simple, fast, and informative for you.
Right. Okay, so program guidelines are available in Platinum. And of course, if you have any questions, you can contact your FAM account executive. And so speaking of questions, we do have a couple of questions coming up And the first one I want to go back to is a bank statement. This is from Janeth. Janeth asked, is the bank statement valid for first-time home buyers?
Absolutely. First-time home buyer can originate in the Flex Bank program.
Okay, very good. And then Dennis is asking, can a borrower who has been self-employed for many years, but who started a new business 16 months ago, use a 12-month bank statement program?
No, you need to be self-employed in that line of work for 2 years.
Yeah, and oftentimes you get these little one-offs, and especially right now, as I'm sure people have changed. So when you do run into those, contact your FAM account executive and go through those in particular. Or if you're not sure about the income qualification, that's what that PreCheck is all about, is being able to get a set of eyeballs on those. And, you know, we talked about this when we did the jumbo webinar earlier this week, Mindy, and same thing here. What this provides for you is an incredible alternative to offer a solution for those non-traditional borrowers. So whether they're self-employed, whether they have the assets. But what I always like to look at is this a reason for you to call one of your realtors and let them know, hey, I have available an incredible program for any self-employed buyers that you have, anyone who has assets that maybe doesn't have a traditional job. And if they do, then that gives you an option to be able to pick up a loan from them. So I challenge all of you to pick up the phone and to call 3 real estate agents today and just let them know, number one, you have this available, number two, and find out what they have. You know, what are you seeing right now? And you know, offer it as an option. Okay, so a couple more questions from Janeth. Can a borrower not have rental history for the bank statement program, lives with family?
No, a borrower cannot be living rent-free for any of the Flex products.
Yeah, so you need to have that 12-month history of making payments, paying rent, and it needs to be documented. So even if they are living with family, it needs to be documented that they are paying rent. Okay, Shirdia is asking, on a 12-month bank statement loan, will you require $450,000 in assets in addition to funds needed for closing?
That's the amount of assets the borrower needs, and that would have to be after you subtract your funds for closing.
So it's after. Okay. Okay, and Vince is asking, when using the asset in combination with full doc, is there a minimum? Oh, I think we answered that one. Minimum of assets, we did that. 250,000.
That was 250,000.
Yep. So I think that is it for questions. And if you guys have any at the end, throw them in here. We'll stay on for another minute or two, but always make sure any questions that you have, contact your FAM account executive. And if you're looking for program guidelines, you can find them on Platinum. And if you have a scenario, first of all, get your documentation, send it in for your PreCheck, and call your 3 real estate partners and let them know you have this. Type in the Q&A box, type in the chat box. Let me know you're going to do that. You're going to pick up the phone and you're going to call 3 people and you're going to say 3 realtors and say, hey, I just have available to me a brand new exciting program and wanted to find out, who are your buyers right now? Do you have any self-employed buyers? Even if they have someone who is an in-house lender, you can let them know, hey, I'm not trying to replace your lender. I just want you to know that there are some incredible loan programs available I can help you with. So give me a shot. Okay, so is anyone going to do that? Is anyone going to pick up the phone, type in the chat box, type in the Q&A box? Let me know. I'm on it, Ginger. Say, I'm already on the phone. I can't even type right now. Are you kidding? So, so I'm seeing some of you in here. Yes, absolutely. Going to do it. Excellent. Okay, so remember to register for our upcoming webinars. We have one next week, and that is on May 20th. We're going to be going through how to call your real estate agents, what to do, scripts, how to get back into that mode as far as making those phone calls. And you can find out more about all of the webinars we're doing at famtpo.com. So Mindy, I'm going to sign off here. Thank you everyone for attending, and we'll see you on an upcoming webinar.
Thanks, Ginger. Have a good day, everyone.